Comments made on the following paid commercial program are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time.
Welcome to the Money and Wealth Show. On this week's program, tax tips with David Ingram, money commercials, and our special guest, David Skarica.
It's all about money at the HouseStreet.com Money Expo 2010. They'll be talking money, making money, saving money, and protecting assets. See Garth Turner, Michael Levy, Ross Cluck, David Smith, and David Morgan. Plus, visit with industry exhibitors. The HouseStreet.com Money Expo in Langley, February 27th and Kelowna, March 13th. To attend free, pre-register now at HouseStreet.com. That's HOWE Street.com. It's all about money at the HouseStreet.com Money Expo 2010.
Welcome to the Money and Wealth Show. I'm Sterling Fox, and our special guest this week is David Skarica from AddictedToProfits.net. Welcome, David. Good to see you.
It's great to be here.
It's good to have you with us. David, I should point out, is a Canadian from Ontario who has relocated to the Bahamas, and that's where the website and all your activities take place, right?
Yeah. Well, I have it's a little eccentric what I have going on. My business is actually an Irish business, and I live in the Bahamas, and my bank account's in Europe, so I'm international man, let's put it that way.
International man of money and mystery. Good to have you with us. And I want to draw on your international expertise to talk about a lot of things today, David, not the least of which is currency. Let's talk about the U.S. dollar to start things off with, because we all know about the mega trillion-dollar debt pile the U.S. has found itself under these days. How do you see that affecting the greenback, short and long term?
Well, short term, the dollar is benefiting. It's not really rallying. It's benefiting from this weakness in the euro. Like we're seeing, the problems in the pigs, as they call them. Portugal. It is pain, I guess. Mm-hmm. Portugal, Italy, Greece, and Spain. Right. Because Ireland's, they give you one, it's spelled with two I's. And these countries have huge debt and deficit problems. But actually, the interesting thing is, if you look at it on just a number scale, the U.S. is just as bad. Like, for example, everyone's talking about Greece having, 10% of GDP or 11% deficit and 120% of GDP debt. Well, the U.S. right now is at about 11% of GDP in their deficit, 83% on their debt, and if you include the states, they're over 100% of GDP of their debt. So really, it's not that much different. And the kind of irony of all this is, why is it rallying? Because, people are worried Greece can't get a bailout, and basically Greece can't print their own money to, buy their own debt, and, they have to actually cut spending and that sort of thing. So the U.S. can print money and buy their own debt and be fiscally irresponsible. And it's kind of this perverse situation right now where the dollar is rallying because they have the ability to do that, and people are worried because Greece and some of the other pigs don't have the ability to do that. Now, I think this is a short-term phenomenon. I'm not a doom and gloomer on the European Union. I think this is obviously showing some of the weaknesses of it, but I think at some point, you'll get some kind of minor bailout for Greece, and you'll see a rally in the euro and a short term a decline in the dollar. So short term, we could go a little lower in the euro and higher in the dollar, but longer term, I think we'll go lower. And as Deutsche Bank recently said, I think what's going on in the pigs and in Greece is actually setting the stage of what's going to happen in the States in 2 or 3 years, like that being like a debt crisis.
Well, yeah, already the States is caught between a rock and a hard place. They've got this incredible debt load, and yet they are now rededicating themselves to job creation.
Yeah.
Now, how do you square that circle?
No, I think at some point you have to see. I think the problem we have right now is politicians can only look 4 years out. So if you look at what happens in Singapore, when Singapore had the financial crisis happen 2 years ago, their actual leader and president, he told them, look, we're in a global financial crisis. We're a global financial center. We're going to be hit. So you have to tighten your belt. You have to save your money. People are going to lose their jobs, but, we'll get through this sort of thing. Well, in the U.S., they don't tell them that. They try to, Clash for Clunkers to try to get people to spend.
Which was a hugely successful program.
Yeah. In the short term, that was
Right.
a hugely successful program. And of course, the first time, tax credit for home buyers, that was successful too, and kind of propping up the housing market in the short term. So the U.S. is just promoting consumption, and the government now is spending to replace the fact that consumers are reining in. So, but at some point, I think you have to eat it. You have to say, look, we can't spend our way out of this. We can't keep increasing the debt. We're just going to have to face the fact that we're going to have a tough 3 to 5 years, and we'll have to cleanse the system and get around it. But of course, politicians don't want to say that to the people, and that's a major problem. People always talk about jobs, but they don't realize what job creation does, or how it's created.
Well, and a lot of people say government really ought not to be in the business of even trying to create jobs in the first place.
No, it should set the environment where people can create jobs. Like people like Bill Gates and Steve Jobs are the people who create jobs,
Right.
not governments.
Now, we're talking about the U.S. dollar. Let's bring it home to the Great White North, where you've returned for a few days. How about the loonie versus the greenback and international currencies?
I think this is when we see that a lot of this dollar rally is just euro weakness. That the euro has gone from about $1.51 to $1.35. So it's gone down over 10% as we speak. Where the Canadian dollars peaked around 97 cents. Okay. Now it's about 95 cents. So it's barely even come off the top. Same with the Aussie dollar, just come a few pennies off. So mostly what we're seeing is like the euro and the American dollar are both, in my opinion, very weak currencies, and they're just moving against each other. And I think we're going to see stuff like the Canadian dollar and the Australian dollar and maybe some of the Asian currencies strengthen against the US dollar going forward. Remember, when we get through this bout of, say, euro weakness and the dollar rally, that's going to bode very positively for the Canadian dollar, because we have a thing in technical terms called relative strength. And what relative strength basically means is on a decline like we're seeing now in other currencies versus the dollar, if you hold up better, probably on the coming rally, you will outperform. So that's really positive for the Canadian dollar. And I think once we get over this one-for-one, I guess you could call it resistance, we could go a lot higher. Now, the politicians in Canada don't want that to happen. But I think there won't be so much of a fight, because I think that a lot of the industrial and manufacturing base has already been lost with the dollar over 90 cents.
You're watching the Money and Wealth Show here on Check TV. Our special guest this week is Dave Skarica from addictedtoprofits.net. Lots more to come. Stay with us.
Good afternoon. My name is Larry Ray. I'm the president and CEO of American Manganese, Inc., a company that's operating a manganese discovery at Artillery Peak, Arizona. Currently, we have a resource of about 11 billion pounds of manganese, which currently trades at $1.30 a pound. We have a 43101 economic evaluation that shows it to have very robust returns, with the potential of being the lowest cost producer in the world at 45 cents a pound. Our plans are to push this project further by drilling 191 drill holes in the next 6 months, entailing some 62,000 feet or 15 to 16,000 meters of drilling. American Manganese, Inc. currently trades under the ticker symbol AMY, or AMY, on the TSX Venture Exchange. If you'd like more information on us, visit us at our site, americanmanganese-inc.com, or give us a call at 604-531-9639.